Hello, everybody. Welcome to Wednesday. The S&P 500 was down just a little bit more than 1/4 of 1% today. We're still trying to get up through that new all-time high. It is an important time for the market because, you either kind of set a double top where this particular run fails, or you continue the run that we were on prior to this last drop by getting to a new high and staying up there and continuing to move. It'll be interesting to see. Of course, every time you hit these things, generally you have a lot of selling that's in there. There's some pressure. It's not always that easy to get to these new all-time highs. I guess one of the other issues has to be, what's the catalyst? So we had some catalyst potentially today. The CPI report came out pretty good, only 0.1% inflation month over month, which is, very tame as far as that goes. Didn't get the kind of play you think it might have gotten. I think because people are still waiting to see, what's that CPI report look like for August and September and October. Tariffs are here, but companies may be absorbing some of that. That'll become more difficult as time goes. We're looking at an average tariff someplace in the mid to the high teens. We had, news, of course, that the Chinese U.S. negotiations went well. As far as I can tell, Trump put out a piece saying that tariffs were 55%. It sounds like the tariffs didn't actually change. There was always some pieces that were at 55%, but the main tariff is still at that 30% level. I could be wrong on that, but I read a lot of different articles and it was very confusing. But what was clear was the fact that China has agreed to speed up the delivery of these rare earth metals, specifically these magnets that are needed for defense, for auto manufacturing, etc. The agreement in Switzerland, the idea, at least from the U.S. standpoint, was that was already in place, and China started to slow walk those deliveries back to the U.S. And even Europe. Actually, they're caught in the same problem here as far as that goes. And what China probably did that on purpose just to kind of show the power of what they have, and give them some more negotiating power. Because we weren't getting our rare earth metals, the U.S. threw on some export restrictions, even restrictions for Chinese students at American universities. Apparently, those have been eliminated in exchange for speeding up these rare earth metals. And far as I can tell, that's kind of is what we got out of this particular 2 days of negotiation, was more or less what we had after Switzerland, but made more framework on how it's going to work and what have you too, and hopefully some new speed on these rare earth metals. This is going to be a problem for the U.S. and actually for the world. They've been working on this for the last 40 or 50 years. And they now have 92% of the processing in all these rare earth metals. And, without those, the world comes to a halt. So it's a pretty good, position that they're in as far as that goes. Be great if we could start to work towards some of those, things ourselves, semiconductors, PPE, rare earth metals, some of these things that would be really nice that we had some control over. However, that type of stuff takes a really long time to get done. So that's be interesting to see how that plays out. But again, the market didn't really respond to that either today. I think because it wasn't really any different than what we have so far as far as that goes. So we'll see how this plays out. I think the key things, of course, here are just what are going to be the impacts of all of these different policies. With the deportations, with the lack of tourism that's coming in, with the tariffs that are coming online, and all of these different pieces. So I think that's what the market's going to be waiting here for, at least somewhat. So earnings were quite good in the last quarter. We're heading here for another about 4 weeks. We'll be heading into the next earnings season. Probably be okay, but it'll be interesting to see what some of the guidance is and see what some of the impacts of these tariffs are. But I think really we're going to probably see more from the third quarter reporting as far as that goes, which will be this quarter's numbers. So altogether, not bad. We had a 10-year treasury auction that went off today. Went off very well. Nice strong sales. So we had the 3-year, we have 10-year. Now we have the 30-year coming up tomorrow. So that'll be interesting because we had some trouble with the 20-year auction to see maybe it's the longer term things that we're seeing some softness in. But so far, we've seen some pretty good sales. Again, that's quite important. It means that the bond market is still fairly happy with what's happening in terms of all these other issues, at least at the moment. So we'll see how that plays out. So, all right. So that's it for today. Look forward to being able to see what's going to happen tomorrow. We'll talk to you then. Thank you.